I'm Chris Remington, live here at the New York Stock Exchange. We are speaking with a seasoned trader, Ben Willis. He's going to be discussing with us today what the impact the fiscal cliff could have on financial markets. Ben, I want to thank you so much for joining us today.
Glad to be here. I hope I can help.
So let's begin. About 3 weeks from now, we could see automatic budget cuts occur in Washington. And I'm wondering if the same sentiment is felt in Washington that is felt here, that change needs to happen.
Well, I believe what the market has been telegraphing for quite some time. If you go back to particularly, we use the start date of the election of the president being reelected and the day after. The tape, as we like to call it on Wall Street, is sending a very clear message to those people that know how to read it. We fully expect the elected officials that we put in office to come up with a solution to the fiscal cliff so it doesn't happen. What the tape is telling us is that if we believe what you're telling us, that you will come to a resolution. The problem that you'll see is then, as Mr. Boehner said the day after the election, the market tanked 300 points because there was an inference that they were not going to settle. That was a very clear message to even the most plebeian reading of the tape to say, don't screw this up, Washington. Get this right. We're banking on you, literally, to get this right. And if you don't, this is a little taste of what's going to happen.
So we've seen in Europe and countries like Greece as well as Italy that sovereign debt and large budget deficits have led to real market fear. And I'm wondering if that could potentially be a problem here in the United States, that we could see investors scared and pulling out of the market.
Absolutely, it is possible. Is it probable? I don't think so. We are still the greatest economy on the face of the earth by far and away from most others. I'm very afraid to walk people past the idea of Greece. It's been a very sexy headline for the rest of the world to look at, but the fact of the matter is, if you want to look at it in real world terms, it would be the equivalent of Arkansas telling the world that they're going to declare bankruptcy. It's not very important. The fact of the matter is that it was people tried to paint it as a blueprint for the rest of the Eurozone. And the situation, in fact, is there is no blueprint for the Eurozone because every country is so unique. Greece was entered into the Eurozone by magic that was created by Goldman Sachs that allowed them to get in. That's a well-known fact. Spain has its own banking system that's confusing to the rest of the world. The EU does not have a central banking system, which is part of the problem with Italy and Germany trying to support the Eurozone because they don't want the burden placed squarely on their shoulders. So it's not as clear-cut as we'd like to see. But for the United States, if our elected officials, I like to call them clowns, but that's my own personal opinion, screw this up, I personally believe the U.S. Treasury market is one of the great bubbles of all time. I think the air will come out of that bubble a lot faster than the world would ever want to see.
So let's discuss this hypothetical. If these clowns, quote, screw this up, which sectors of the market would be impacted the most heavily?
Well, I think first and foremost, any of the industries, particularly the U.S. banking system, the money center banks, that are holding U.S. Treasuries as Tier 1 capital. That would be insurance companies, that would be banks, that would be a whole host of areas throughout, not just the United States now. Now it starts to spread to other sovereign nations. China, Japan, Germany, our three largest creditor nations to us, will not be happy with the results. And if you want to see what Japan can do to a country without firing a shot, look what they did to Japan, when China did to Japan, when there was a little dispute over an island. China pulled the rug out from Japan, and they cratered into their next recession. So it's something, if you want to see a blueprint, I'd keep an eye on that one.
So this could potentially lead to some very serious global economic problems.
Without a doubt, without a doubt.
Ben, I want to thank you so much for speaking with me today. Before I let you go, what can investors and traders do here in New York to send a message down to Washington that change needs to happen?
Well, I think the message, first and foremost, is you have to vote for the candidate that you believe that will carry your message. After that, of course, use the media to make your comments. In other words, the social media. Send your Twitters and your Facebooks, likes and dislikes, and the whole idea. And of course, for the bigger investors, not that the individual investor will have that impact on the market, but I think you're seeing those people that are running the very large investment houses are send a very clear message when Mr. Obama or Mr. Boehner steps in front of a microphone and says something that suggests that they're not going to get this done. I think that's a pretty clear message.
Chris Remington, live from the Stock Exchange. Hopefully we will see big changes happen with the fiscal cliff.